Hello friends, Marv Eisen here from Timeless Dollar Trading Academy. And today was Tuesday, May 13th, and the Taylor calculator gave me numbers of 59.05 at resistance, 58.03 support, a range of 63 points. So I set up my chart according to those numbers. 58.43 support, 59.03 resistance, and this is how I set up my chart right over here with this rectangle that I drew out using these numbers, bounded by 9:30 a.m. and 4 p.m. Eastern Time. Now I only trade, I only chart the prices during the S&P regular trading hours. Now we're tracking the S&P E-mini, we're trading the S&P E-mini or micro E-mini. Prices are the same, of course. And so here is how I set up my chart. And of course, the previous day's close, Monday's close, was right here at 58.64, and I get that again from my calculator, 58.64. You see it right here. Okay, so going back to the chart. And so prices were coming in just at about quarter to nine around here, 8:45. And so I'm going to take you through the day. And the news today, and everything is tariff-based today, right? The tariffs are on, the tariffs are off. We made a deal with China. We lowered the tariffs with China. So news was pretty great, pretty good in terms of we lowered the tariff with China from 145% to 30%, only 30%. Okay, so good news, right? And so what's the market going to do in anticipation of good news? It's going to trade to the upside, but we're going to use the trading zone, that 63-point range right here from 59.04 resistance, 58.42, 58.43 support, and we're going to take you through the day, and here we go. Now, I'm going to prove a point when I do this, and when prices start out right here, as they did right at 9:30, you notice that prices briefly touched on the previous day's closing price. Now that is equilibrium. The previous day's price is always equilibrium. So where are prices going to go after they hit equilibrium? Well, they're going to hit equilibrium on days where the market is not so sure of where things are going in the economy. It's going to stick close to equilibrium. But today the news was positive. So prices tended to go up, were expected to go up, should have gone up. And so we wait, and I said, and as I have been saying in my past several videos, when markets are volatile and things are uncertain, wait an hour after the market opens to place your trade. So let me continue until about 10:30. Okay, so 10:30 the market traded up. And right here is the 10:30 candle. All right, I'm not quite there, but just about there. And prices traded through about 3/4 of the trading zone. And so you can say, well, Marv, I missed it because I waited till 10:30. I listened to you, I waited till 10:30. But nevertheless, prices are forecast to trade in a 63-point range. So you know what? You can squeeze a little more out of it, and this is how you do it. You transpose the trading zone, clone it to the intraday low. Okay, I'm going to clone it right here. I'm going to bring it to the intraday low. And so there are 10 points between each horizontal line on this chart. 10 points is $50 a point on the E-mini is $500. So let's say we start at 10:30 and we missed the day. No, you didn't miss the day because we can transpose the trading zone. And let me continue, my friends. And we stick close to the calculated resistance. And we're sticking close to it. And we're going up to the calculated range for the day, 63-point range, right there. There we are. So you could pick up 20 points, not too shabby. $1,000 on the E-mini, my friends. $100 on the micro E-minis, not too shabby, even if you waited till 10:30. Now, of course, when I tell you to wait until an hour, usually I say a half an hour to an hour, but when volatility is present, wait an hour. Because the market tries to mask its move for the day, but it can't do it forever. So on volatile days, I tell you to wait that first hour because the market is going to be volatile. It's going to vacillate up, down, up, down. And so on days where prices are going to be less volatile because the news is definitely positive, definitely negative, positive today. And so we can transpose our trading zone. And here was the range for the day, 63 points from support to resistance. And I'll prove the point. I'll take you through the rest of the day, my friends. And after prices hit the transposed trading zone range, they ended the day right at where the trading zone calculated that the day would end, right over here at the regular. My friends, this is the way to trade. I'm telling you, take my course, use the Taylor calculator, use the range that's calculated for the day. Learn how to trade. I mean, there's more to it than just using the trading zone. You can't just rely on one trading indicator. Learn how to trade, and learn how to trade. Take my course at timelessdollar.com, Trading Mastery for Financial Freedom. Not every day does the trading zone give you very good advice. It gives you good advice, but not every day does it give you very good advice. Most days it does. So that's my video for today. Thanks so much for watching. Tuesday, May 13th. 2025, and I'll see you in my next video. And I really do appreciate all your comments and your questions on my videos. Thanks so much again, and I'll see you in my next video.